All right, y'all. Welcome to session 2 of the Jayson Casper trading course. I'm very happy. I'm elated that you have decided to join me and continue on our journey to becoming confident, profitable traders. Now, in this session, we will be dealing with time frames. Time frames are something very important when it comes to trading any asset, because we need to understand that regardless of what time frame we're looking at, if we're looking at the 2-week time frame, if we're looking at the 12-hour time frame, if we're looking at the 4-hour time frame, if we're looking at the 1-hour time frame, if we're looking at the 24-minute time frame, if we're looking at the 9-minute time frame, if we're looking at the 1-minute time frame, if we're looking at the 5-second time frame, we are looking at the same thing. It's just different resolution. Literally just different resolution. It's like taking a picture, okay, of me and my good friend TK Movies. Okay, you may or may not be familiar with who this is. And it's like zooming out. If we're looking at the month time frame, okay, we're looking at the whole thing from a bird's eye view. But if we zoom into maybe the daily time frame, well, now we're looking at a picture like this. And if we zoom in to, maybe the 1-hour time frame, now we're analyzing just a specific piece of the picture. Okay, so from back here, you can tell that I'm a tractor riding, Bible thumping, market cipher loving, Bitcoin holding, tractor riding trader. Okay, but if we zoom in, okay, you might only be focusing on one aspect of the picture. Hey, look, there's a laptop here with price action on it. Or hey, look, there's an open Bible on the tractor. So that's kind of what time frames are. We're looking at the same thing from different resolution, and it's very important that we remember this, because if we go to the daily time frame, we can see that, for example, we're in a clear downtrend, right? We have a high, and then we have a lower low, and then we have a lower high, and then we have a lower low, and then we have a lower high, and we're waiting to see, is this our high or low, and are we going to come up, or are we going to print now a lower low, and this part of the move wasn't actually an actual high? We will see soon. So we're in a downtrend. More technically, we've been ranging for the past 2 weeks, so we're in a sideways market. That's what it looks like on the daily time frame. If we go to the weekly time frame, well, we're clearly in a downtrend on the weekly time frame. We have the high, and then we have the lower low, the lower high, the lower low, the lower high. But if we go to the 1-minute time frame and we zoom out, we're in an uptrend. Okay, so it's the same price action, but it's giving us much more detail. On the 1-minute time frame, we're in an uptrend right now. On the weekly time frame, we're in a downtrend, and it's so intense we can't even see the circle I drew around the uptrend. If we go to the 1-hour time frame, well, we're just kind of trading sideways, right? And you could say we might even be in a downtrend on the 1-hour time frame, because we have the high, and then the lower low, and then the lower high, and then the lower low, and then the lower high. Well, it's not actually a lower high. We're ranging right here. Okay, the reason I'm going through all these examples is because it's very easy for people to get confused about time frames, and people get messed up because they don't understand how to look at the price action as a whole across all different time frames in order to identify your environment and then execute an entry. The purpose of time frames is to identify our macro environment, then identify our local environment, and then execute an entry. You're going to be using the higher time frames, depending on your style of trading. For me, I like to use the daily and the 4-hour to identify my macro environment. I like to use maybe the 4-hour to the half-hour to determine my local environment, and then I like to enter a trade on the 1-minute to maybe the 12-minute. Okay? We're going to be going over looking at the same price action from different resolution. The more you zoom in, the more details you get, okay? If you're a scalper, you're going to be using that 1-minute time frame. If you're a swing trader, you'll be using the 4-hour, the daily, the weekly, the monthly even. We're going to be talking about looking at market cipher B on different time frames as well, okay? Because this is very important, and I'm going to get into this much more later in the course. But market cipher is an amazing tool, but people can get tripped up if they don't know how to analyze it across multiple time frames. So how do we choose the time frame to trade with? When you're deciding on a time frame to trade with, it's first important to understand what type of trader you want to be. Okay, I love swing trading. The longer I can be in a trade, the better, right? My current Ethereum trade, okay, is up 651% right now. I've been in this trade for weeks, literally for weeks. I like trading like that. I will close the trade soon if we confirm the uptrend on the daily time frame. Okay, so if you're a swing trader, what will you do? You'll look at the daily time frame. I just entered a Bitcoin swing trade recently. I did that by looking at the daily time frame. I don't care what the 1 minute is doing. I don't even care what the 4 hour is doing. Okay? I love to use the 4 hour chart. The 4 hour chart is my favorite Bitcoin chart. I use the 24 minute chart. I use the 12 minute, the 6 minute. The time frames need to accomplish the following things for you. And I'm going to get into what those are here. If you're using a time frame that does not do one of the following things, stop using that time frame. Okay? When you're analyzing time frames, you need to have an environmental time frame, which is a larger time frame that you will use to identify your environment, and then an execution time frame, a smaller time frame that you will use to execute trades. These two time frames will act as a compass as you spend time looking at the markets. They will keep you oriented so that you always know what's going on. If you do not have these two time frames down, you will be lost. You'll be tossed to and fro by every signal you see as you go from time frame to time frame. Think about it. If you're on the daily and you see a downtrend, but then you go to the 1 hour and you see a sideways market, and then you go to the 1 minute and you see an uptrend, you're going to be so confused. You need to pick. I always say start with 2 and work your way up from there as you get more experienced, okay? Start with 2 time frames and work your way up from there as you get more experienced. The larger time frames to identify your environment, your smaller time frames to actually execute your trades. On the 4 hour time frame, okay, we can see that we are in a downward trend, potentially. So you know when you're going through the 1 minute time frame that if you see that we're moving in an uptrend, it's actually just a retracement of the downtrend. That's just an example. If we turn on Market Cipher, my favorite indicator, Market Cipher B, okay, and I use the blue and the purple, but for the sake of this course, I will make it the normal color, okay? Ugh, hate the normal colors. Same with Market Cipher, right? We can come to the 4 hour, and we can clearly see that we're printing a red dot, and the red dot on Market Cipher on the 4 hour usually means we have some ways to come down. But then if we go to the 1 minute, what do you know? We're about to print a green dot, which means we're about to come up. Which one do you listen to? I'm going to get into that in the course, okay? I guarantee you guys will know at the end of this, but that's why it's so important that you have multiple time frames for different purposes, okay? The 4 hour time frame is telling me that overall we're coming down. And so if I see now on the 1 minute time frame that we're coming up, I need to interpret the lower time frame through the lens of the higher time frame by saying I know from the 4 hour time frame, from the higher time frames, that overall the macro trend is downward. So if I come to the 1 minute, if I come to the 5 minute, if I come to the 6 minute, the 10 minute, I need to interpret what I'm seeing through the lens of those higher time frames. I'm going to get into that more later. Okay, now we get into my favorite thing ever, support and resistance. Now, I get giddy as a schoolboy, when I think about support and resistance, because, hear me out when I say this, guys, and I mean this 100% seriously. There is 0% sarcasm in my voice, and although I do have a dry, sarcastic humor that you will either like or hate throughout the course of the course. I mean it when I say that support and resistance are the most fundamental things for trading. The most fundamental things for being consistently profitable over time. Regardless of what form you use them, they're important. What I mean by that is people have different styles. CryptoFace, what does he do? He uses spider lines. Those are just levels of support and resistance. Flopping Grover, he uses Market Cipher SR, stands for Market Cipher Support and Resistance. Me, I like to get my levels of support and resistance through technical analysis, and those are going to be the foundation for my trading. I don't even think about entering a trade unless I have my support and resistance levels clearly marked out on the chart, because this will give us something called market structure. Market structure. Let me show you what a marked up chart looks like, okay? Let me go to the 4-hour time frame, and this might be a little overwhelming, okay? But on this chart here, okay, I have all these different lines. Okay, these are lines of support and resistance. And I'm going to get into exactly how to get these levels throughout the course. Okay, but we need to understand that this is giving us market structure. It's giving us some kind of reference point from which we can trade. You know, if we come down to one of these levels, you know, we get a perfect bounce off of it here. We get a perfect bounce off of this trend line here, a perfect bounce off of this support right here, a perfect rejection off that resistance, perfect rejection. You know, we come up above this level and we get a move to the upside. Support and resistance, extremely important. So, what is support and what is resistance? Well, support is, you can think of it as a floor that price cannot move below. Okay? If you're analyzing a chart, you could see right here, we could draw a line right here. I'm going to make this a little bit thicker. Okay? Draw a line right here. And basically, support and resistance are levels where the price has a floor and the price has a ceiling. We could draw another line right here and say this is the support because it's a floor. This is the resistance because it's a ceiling. Now, these are just arbitrary lines that I drew on the chart based on the price action. We're going to show you how to mark these levels. But one of the most important things about trading is buy low and sell high. I'm sure you've heard this all the time. If you're an investor in any kind of asset, buy low, sell high is the most common thing you will hear. Well, how do we determine what's high and what's low? Okay, if we go to the weekly time frame and we zoom out, are we just going to only buy down here and only sell up here? What determines highs and lows on a chart? Well, it's determined by support and resistance levels. And if you know how to mark your support and resistance levels, then you'll be able to make good trades, because in general, when price comes to a support, you can look for a long. When price comes to resistance, you can look for a short. When price comes to support, you can look for a long. When price comes to resistance, you can look for a short. When price comes to support, you can look for a long. When price comes to resistance, you can look for a short. Okay? Now, this is very important, but if you have a level of support, okay, and price drops below that level of support, that support gets flipped into a resistance, okay? For example, we lost this support. If you hear people say we lost the support, that means the price fell through the support. Now this support, what used to be support, is now our resistance. We come up to the old support, which is now resistance, and we get a rejection. And again, we come up to the support, the old support, which is now resistance, we get a rejection. We come up to the old support, which is now a resistance, and we get a rejection. Okay, it works both ways. It's like the floor of a house, right? If we have a house, and oh, there's a red dot in the Bitcoin 1 hour. It's a good thing I'm short. If we have a house, okay, and let's just let's draw another line right here, because I think we can see that this level is also respected as support right here. See, we come right down to that support. If we have a house, okay, and the house has multiple floors, okay, this is my house. This is my roof. This is my chimney. We have one window up here, circular, and a door, okay? So, if this is our house, for the people on the first floor here, this level is their ceiling, and this level is their floor, okay? Now, if you were to go upstairs, what used to be the ceiling now becomes your floor, right? If you were chilling down here, well, this level is the ceiling. But if you go upstairs, now what used to be the ceiling is the floor. And that's how you have to look at support and resistance levels, okay? If the price goes upstairs, what used to be the ceiling now becomes the floor. And so if you're trading and you see price has come below, let's say, a support, you need to keep that level in mind still. The reason is because that old support has now become the ceiling. And you can look for a trade. If we lose the support and come back up to it, you can look for a short position there. And on the contrary, if we lose a resistance, okay? If we lose a resistance and then we, when I say we lose a resistance, what I really mean is if price comes above a resistance and then comes back down, well, now we can look for a long position off of that, because what used to be the ceiling has now become the floor. And just some terminology, okay? If you hear we've rejected off of that level, basically it means prices come up to that resistance and then rejected, right? It's like the really hot girl in high school, okay? That nerdy guy with the neck beard, right? He listens to technical death metal only. Very talented musicians, but girls don't care about talent, right? They want someone who just strums a few chords on the acoustic and has long, weird hair, right? So the neckbeard technical death metal guitar player, he comes up to the resistance, which is our hot girl in the high school scenario, and says, hey. He says, hey, do you want to go out with me after school? And she says, no, I reject you. And then he comes back down, okay? That's what it means, a rejection off of a level. We rejected off of that level. We rejected off of that resistance. Okay, so now I'm going to talk about how to actually mark these levels, because this is very important. And the most basic way to mark these levels is by doing something that I call top-down analysis. Top-down analysis is basically where we're going to start on a higher time frame and work our way down to a lower time frame, and we are going to mark levels of significance. Okay, mark levels of significance. And because I just can't deal with this red and green chart, I'm going to have to put on dark mode. And I am going to keep the candles red and green for the sake of this educational purpose. But what we are going to do is we are always going to start on the weekly time frame, and we're going to look starting to the left of the chart. And we're going to find areas where price historically has found a sticking point on the weekly time frame, where price has historically found a sticking point. So the first thing that I notice is right here, okay? Now I'm going to put a horizontal line right there, and I'm going to make this a thin line. I'm going to make it yellow. And because this is on the weekly time frame, I'm going to go ahead and put weekly right here, okay? What I've done is I've started to the left, and I've looked for places where the candle bodies tend to open and close a lot, okay? So right here on this line, we can see that the candle bodies open and close on this level. Not only that, but we can also see that we wick down to it here, and it acts as support. We wick down to it here, it acts as support. Support, support, support again, right? And then what do you know? Way back, way ahead in the future, after the dump, where do we wick down to perfectly? That same exact support. Now, the reason we're looking for places where price has found a sticking point is because this indicates to us that there's been a lot of liquidity in the market. Okay, there's been a lot of buying and selling at one specific point, at one very specific point. And because there's so much buying and selling here, the market will remember that there was a lot of buying and selling. And so let's say that the market moves up, and then the market, and when I say the market, I'm just talking about the buyers and sellers, including those who are really can put in big positions, the whales, the people who move the market, will say, hey, I want to fill a really, really large buy order, but there's not enough liquidity at the market. The market needs to come back down to those areas of high liquidity, and then large orders can get filled, which will then either move the price up more or move the price down more, right? Depending on whether they're buy or sell orders. And so we're going to do this on the weekly time frame. And, I like to start to the left of the chart. These are good. To the left of the chart are good places to mark if you want, just to generally get some price reference points here. I put one right here because of these candle open and closes right here. You could see one maybe right here as well. Okay, you might see one right here too. Then also I like to come to the right of the chart and mark some levels too. And when I come to the right of the chart, I like to mark them with a horizontal ray instead of a horizontal line, just so that we know, like 58.2, that's a very important level because, here, hang on. That's a very important level. You know, I'll put weekly here too. We'll put weekly on all of these, because this is the last time we had 2 candle bodies before the major dump, right? And I don't know if I would even put one right here. I don't know that. But I usually start to the left of the chart, and then also you can come to the right of the chart so that you can get zones of support and resistance, right? Like you could say that this is a general zone of support and resistance, and that's something else to keep in mind, guys. When we're doing these by eye, these are not usually going to be exact levels, not the exact number. It's going to be a general zone of support and resistance that we can look for a reaction off of. When I say a reaction, I mean when the price comes to one of these levels, we can expect a reaction. Like, check it out. We marked this daily level from back here. When price comes back down and dumps, what happens? We get perfect support at that same level. We get a perfect support and we get a reaction, which is a massive bounce. We got a massive bounce off that weekly level of support. And so we're going to do this on the weekly time frame. And these are going to be called our weekly levels of support and resistance. Now, it's important to remember that the higher the time frame, the more significant these levels of support and resistance are. And again, these are giving us market structure. These are giving us reference points from which we can trade. And look at how well it's respected. I marked these lines before the crash. Okay, we marked these lines before Bitcoin crashed. And then as Bitcoin is crashing, what happens? It's acting perfectly as support, perfectly as resistance, perfectly as support, perfectly as resistance. Do you guys see why it's important to mark these levels out? These are giving us our market structure. These are giving us our highs and our lows. These are giving us areas from which we can look for a trade. The first thing I do when I'm looking for a trade is I wait for price to come to one of my levels of support and resistance, because I know there's going to be a reaction in that general zone. Now, once we mark our weekly levels, we'll go to the daily time frame. And I like to use orange for the daily time frame, but we're going to, put on our good old horizontal line here and look for places where price has found a sticking point. Now, for the daily time frames, you can do wicks or bodies for this, right? You can do wicks or bodies. I tend to like to do the bodies, the candle bodies. So I'll do one here, and I'll make it a daily time frame. Make sure it says daily. And you don't need to put these all on your chart at the same time, right? But you can, but it makes it a little bit more sloppy, right? So we have a daily level right here at 61K. Do you have any more significant daily levels of support? You could say right here, right? You could say right here, where we have all this acting as support, right around 45. Right around 45, give or take. We could even move that up just a smidgen, right about the 45. And then look, we can see that that level is respected as support later on, right? That level is respected as support later on. We come down, we wick right off of it, and then we flip it, and then it becomes our resistance. Where's another one? 51,000. You guys see that? The candle bodies right here. This is our support, then it's resistance, then it's resistance, then it's support, then it's support. And then look, later on, while we're dumping, we fall through that support, and then it acts as our resistance. Okay? So you're going to mark these levels out. This is going to give you your market structure, and it's very important that we do this. Okay? It's very important that we do this. We're going to mark the daily. Then you can go even lower. You can maybe go down to the 4-hour time frame and maybe mark some levels of 4-hour support and resistance, okay? On the 4-hour time frame. And you're really just looking for places where price has found a sticking point. And on the 4-hour time frame, you know, you don't have to go all the way back for this. I find you can just use local areas. You know, I really don't. As far as our current trading right now, I would say perhaps potentially this is a level of 4-hour support and resistance right here. I'll make it green, and the reason I say that is because look at this. It's our support, and then resistance, and then support, and then currently is acting as our support. Okay, you could say that we have one right here too, because look at this. Support flipped into resistance right there, and I'm sure if we go back far enough, we can see this line is acting as resistance right here, support right here, almost support right here. So we can see that these levels are respected. Other things that are good to keep note of, guys, are all-time highs, right? All-time highs. So, you know, for example, this is the January all-time high. You might want to mark that, like if you're on your chart and you're looking at these peaks, you might want to put lines at these peaks, because a lot of times these peaks will be support or resistance level. So, for example, the January all-time high, which is basically this 4-hour resistance or support, basically the same exact level. You know, look, it's respected again in the future. And if we come up here and we mark this peak, you know, we can see that it's respected again in the future right here. So you're going to do this and do your market structure. And really what you're going to do is now when you come down to your lower time frames, and don't worry, I'm going to get into this much more, okay, much more. But what we're going to do is when we see that price is coming to one of these levels, that's where we would look for a trade, right? We would look for a trade when price comes to one of these levels. So if we see that price is coming up to a daily level of resistance, we would look to short that level, okay? And I know that this might be over somebody's head right now, and this is just an example so that you're familiar with the concept. I'll get into this much more later, but we see price has come up to a resistance. When we come up to a resistance, we look to short. This is actually important. Buy low, sell high. We always want to start by looking to short resistances and longing supports. If you always try and long resistances and short supports, you're going to find that you get wrecked more than you make money. So when we come to a resistance, our first inclination should be to short. When we come to a support, our first inclination should be to long. When we come to a resistance and we're looking to short, I will take out my short tool. We can enter a short here. When we come down, let me just put this concept in your head, and then you'll understand more at the end of the course. When you're looking to short a resistance, you want to see us come up above the level. Then you want to see us come down under that level again. And then you want to see us try to get back up and reject. And when we reject, that's where you're going to enter your trade. You're going to enter your trade right here. You're going to put your stop loss above the last swing high if you're shorting. We learned what a swing high was last session. And then you're going to set your take profits down at levels of support. Okay, now of course, depending on your style of trading, we're going to have multiple take profits here. And the way you're going to set your take profit levels is by looking to the past, okay, looking to the past on your low time frame that you're using to enter the trade, in this case the 6 minute, and you're going to find areas of support and resistance. So I see right here we have boom, 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 a level right here, okay? And so what you would do is you would enter the trade right here. I know that this is skipping ahead, but just so that you have exposure to this concept, right? This would be one take profit level. So we enter our short right here. When we come to this white line, we take maybe 30, 40% out of the trade, take partial profits. Then we move our stop loss to break even. What this does is it ensures that this is now a winning trade. Worst case scenario, we leave this trade in profit. Best case scenario, we leave this trade with more profit. So we've taken partial profit out here. We let it rise, see what happens. Boom, we hit our second take profit. Now maybe we take another 20% out of the trade. Okay, so we have maybe 40% left in the trade and let the rest ride. And, eventually, well, technically, we'd still be in this trade right now. We would have not gotten stopped out up here. And we would have hit this take profit down here as well. So this would have been a very good trade for us. would have come all the way down here. But the way we're entering these trades and the way we're taking profits is through support and resistance. And maybe you could have said I had another take profit here, right? Because you see this area. And so this is the trade that we entered. And oops. And you can see that it all has to do with support and resistance, right? It all has to do with these levels of support and resistance. Our take profits, our entry point, it all has to do with support and resistance. And what I just did on this screen here is, wait a second, this is the outline for session 1. Where's the outline for session 2? Here it is. What this does is it gives us our market structure, and it's very important to outline our market structure. So again, just to reiterate, we're going to start on the higher time frames. We're going to find areas where price historically has found a sticking point, and we are going to mark a horizontal line there. We're going to go Control H, or you can come right here and just click horizontal line and then click it on the screen, or you could just do Control H. We're going to start on the weekly. We're going to find areas where the weekly candles have found a lot of opening and closing. Okay, we see that right here. We see that right up here on this yellow line. We're going to make sure that we label our lines weekly, daily, 4 hour. Okay, that's extremely important. We're going to delete these white lines here because they were just for example's sake. This is going to be your basic market structure right here. Your basic market structure for entering and exiting trades. Okay? And of course, you can, if you're scalping, you can do this on the lower time frames too. You can absolutely do this as a scalper on the lower time frame. Watch this. Just take a look. You could see right here that this is a level of support and resistance on the 1 minute time frame. We come up, it's our resistance, 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 support, support, resistance, resistance, resistance. And so you could have said, when we come up to this resistance, I'm going to short that. And Market Cipher would have given you confirmation on this too, because we see clearly on Market Cipher, and we'll get into this later, but we see on Market Cipher something called a bearish divergence, where the price is going up consistently and the momentum is coming down consistently. This is something known as a divergence. If you've been on the YouTubes long enough, you've heard TA guys talk about divergences. Okay, if the price is going up, yet the momentum is coming down, that means money is leaving Bitcoin, and yet the price is going up, therefore making Bitcoin overvalued, and therefore there needs to be a correction. So this would, on the 1 minute time frame, you can use support and resistance. It all depends on what time frame you're trading on. And again, this would have been a short position. We come down, we get the retest, we reject. You can enter right here. You put your stop loss above the last swing high. You would set your take profits down here. And again, to set your take profits, you're going to look for places of support and resistance. The first one I see is quite clearly right here. I'm sorry, yeah, right about here. Because look, it was our support, our support, our support, our support, support, support. And so when we come down, what do you know? We get a nice reaction off of this level. And then I would set my second take profit. If I was taking this short, I'd probably set that down about here, right around here, because you can see this is a nice little resistance and then like a zone of support. And we hit our first take profit, so you take some out of the trade, move your stop loss to the entry. This is called locking in profits. We'll get into that more later. Can't go broke taking profits, guys. That's how you're going to do top-down analysis. Start on the higher time frames, work your way down. The higher the time frame, the more significant the level of support and resistance. The lower the time frame, the less significant. What I mean by that is your 1 minute level of support is not going to stop a 4 hour candle from crashing through it, right? It's just not. Like, let's take a look at those 1 minute support and resistance levels that we marked out on our chart. I mean, right now we're there because we were just looking at the 1 minute time frame, but these candles, they do not respect these levels of support and resistance on the 1 minute. However, if you have a weekly or a daily level of support and resistance, these 4 hour candles will respect that. So it's important to keep that in mind. All right, let us see. How's it going here? Okay, see, my trade is back My trade is back up in the 200s of percent. This is Accordance Bible Software, Exodus 34. So I'm sorry, guys, I'm all over the place. Here we go. So there's different types of support and resistance, okay? We have trend lines. Well, we have the horizontal levels, which I just showed you. Then we have trend lines and channels. Those are the other things I'm going to go over in today's session. Trend lines and channels. What are trend lines? Trend lines are areas where we can connect the dots, okay? We're going to connect the dots. What I really mean by that is we are going to connect highs and lows to create a trend, okay? To create a trend. And let's see if we can do that right here. We'll pull out a trend line right over here to the left trend line, and we will connect highs like this together. Let's see what we can do here. Yeah, we'll connect the highs like this, and then we can connect some lows together too. Let's see what we can do here, like this. And it doesn't have to be exact, but in general, what this does is it creates diagonal levels of support and resistance. Where if you see prices respecting a trend line, you can use these just like you can your horizontal levels. If price comes up here, you could look for a short. If it comes down here, you could look for a long. If it comes up here, you can look for a short. If it comes down here, you can look for a long. And in case somebody is unfamiliar with what shorting and longing is, lest I forget that there are new people here, essentially, longing means sell and buying means short, and it's terms that we use for margin trading. But if we go to good old google.com and we type in longing and shorting, okay, we can get this little thing here on the balance.com. Okay, a long trade is initiated by purchasing with the expectation to sell at a higher price. A short trade is initiated by selling with the intent to repurchase at a lower price. So if you're shorting, you're making profit as the price of Bitcoin or whatever asset comes down. If you're longing, you're making profit as the price of whatever asset goes up. Shout out to thebalance.com for keeping me balanced. Let's see if we can find other trend lines. Well, right now, something that we're all watching is, let's see, this guy right here. These trend lines, right? We got that going on. And then we have this going on too, right? And so we've made some good trades by longing the bottom trend line and shorting the top trend line. And then you can combine these areas with horizontal lines too, like this low of the dump right here, and this support and resistance level right here, which was our support that got flipped into resistance. And so, you know, if we break out of the triangle, which we'll get into in a later section, you know, look for a rejection off of this and stuff like that. Or, you know, you could in here just kind of find that middle point, have a level in here. Trend lines are just another piece of support and resistance that you can use to enter trades. Then we have something called a channel. A channel is basically when price is trading in between two trend lines. You could consider this a channel. This is technically an ascending wedge, but a channel is more. Let's see. A channel is more like this, where it's parallel lines, right? Parallel lines. That's a channel. Parallel lines. Channels are basically just like a top and a bottom, and I can't really find any good. This would be a good right here. Perhaps would be considered a channel right here. And again, you can just find these patterns on your chart. Right here, this was also a channel. Okay, and they're basically just connecting points together and creating areas to long and short from. You don't even have to have the top trend line, right? Like, for example, we can see that this bottom trend line we could have drawn all the way from back here, December 16th. And, sorry, I'm freaking out my screen over here. But we could connect, you know, these areas together like that, you know. Where if we remove this, remove all this stuff, you can see that this was actually a trend line where we came up, we got 1 touch, 2 touch, then we came all the way up here, then we came down and got another perfect bounce off of it, and then we lost it, and then we lost it. We tried to struggle, and then we lost it. When we lost it, man, we lost it. So when you're drawing trend lines, it's very much so subjective, where it's not an exact science, it's more of an art. You're connecting things together to try and find a pattern. And if you see that a trend line is respected, make sure to keep note of that. When I say respected, in case you're unfamiliar with what I mean by that, I mean price is respecting that as a support. If we have a support here and price is actually stopping at that level, that means the price is respecting that level. If price falls through it, well, it's not respecting that level. Okay, guys. Wow. I'm sorry for this messy screen here. So I'm going to get more into support and resistance later, because there's more ways to do support and resistance than just looking with your eye. There's also volume, and then there's Fibonacci levels. When I'm drawing my key levels, I don't just use lines that I can see with my eye. I am using levels that, Bitcoin is getting really close to the bottom of this triangle, where we will be looking for a trade, right? We'll be looking for a long off the bottom of this trend line here. When I'm marking my levels on my real chart, I'm using volume, I'm using levels that I'm seeing with my eye, and I'm using Fibonacci. And we're going to go into all of that, because the more accurate we can get with our levels, the better we will be able to enter a trade. So I will see all of you in the next session. God bless.